Well, good afternoon, ladies and gentlemen. I should say good afternoon, of course, to those of you that are joining me on the East Coast in New York time. We're actually in Delaware, but I always like to say New York time. I'll say good morning to those of you who are joining us from the Central time zones, the Mountain time zones, or the Pacific time zones. And, of course, good evening to any of you who are joining us from across the pond in parts of UK or Australia. Europe, I should say. And good early morning for any of you joining us from Australia or from Asia. Welcome to today's presentation, a look at the PowerOptions portfolio tools to help you manage your accounts, your options investing accounts, and even your stock trading accounts as well. We're going to get started in just a moment, of course. We're going to allow some more time for the attendees to come into the room. I encourage you, using the question pod over on the GoToMeeting platform, if you have questions during the presentation or you want to review something, or if you have even a suggestion as we're going through the PowerOptions tools, the portfolio tools there, use that question pod to send me the question. I'm going to try to leave 10 minutes or so at the end of the presentation as well to handle questions. But I want to encourage you to be interactive and send me any questions that you have as we go through the presentation. Most likely I'll get to, if you have an advanced question at the beginning of the presentation, most likely I have something at the end of the presentation that will answer that. So I might hold off on that question until the end and address it when we get to that point. And I'll let you know when that's coming up. In any case, let's go ahead and get started, ladies and gentlemen. Well, what is PowerOptions? For those of you that don't know, PowerOptions is a patented suite of search and analysis tools designed for self-directed options investors. We do have patented tools that allow you to search across the universe of options in less than a second to identify only those positions in a given strategy that match your personal risk-reward tolerance. And then once you've identified those positions, you, of course, have tools where you can compare the risk versus reward, run what-if scenarios, further research the stock or the option as well. In addition to that, what we're going to cover today is we're getting close to the standard expirations. So we want to make sure everyone's comfortable using the portfolio tools. We're going to cover the portfolio tools to help you paper trade, track, and manage your real positions, as well as evaluate rollout opportunities and adjustments. In addition to that, of course, we have countless educational articles and help pages on the site, both on the tools and the various strategies. This is an older presentation. PowerOptions has actually been in business for over 15 years. Ernie Zeriner created PowerOptions back in 1997 after he retired from Hewlett-Packard. Everyone here on staff uses the PowerOptions tools to trade their own accounts. So we have many more years of combined trading experience. Those of you who are subscribers and trial members know you can take advantage of that support. You can call us during market hours via email as well. And, of course, we do offer those coaching sessions for trial members and subscribers. So you can schedule one of those coaching sessions on Mondays and Thursdays, essentially a 45-minute walkthrough on the site. For those of you who don't know me, my name is Mike Chupka. I'll be your presenter today. I'm the Director of Education here at PowerOptions. I've had the great pleasure of working with Ernie and the PowerOptions staff for the past 10 years. I handle a lot of the coaching sessions in education. I've co-authored 2 books with Ernie on options investing. I am versed in all strategies on the site. We support over 23 different strategies on PowerOptions for the search, comparisons, the analysis. I am versed in all strategies. However, I always like to be upfront. There are certain strategies I have never traded in my personal account and probably never will. These are things such as naked calls, selling a call that's not covered by another call or a stock position, iron butterflies, short straddles, and even short strangles. Iron butterflies and short straddles. I don't know about you guys, but I'm not really good at picking an exact strike price of where a stock's going to be in 20 or 30 days, so I sort of avoid those scenarios. In addition to the short straddles and short strangles, too much risk for me. They don't match my risk-reward tolerance. But if you do have questions about those today or at any time, we'll be able to assist you with those. So today, what are we going to cover? We're going to cover the functionality of the portfolio tools. First, we're going to start off the first 10-15 minutes of the presentation. We're going to walk through the 2 ways to create a new portfolio and start entering your positions. And then we're going to look at, once you have your positions in place, how to evaluate the position analysis, evaluating the rollout opportunities, manually evaluating rollout opportunities using the profit and loss chart, of course, using the simulate trade feature to apply your decision-making process. Is this adjustment, does the adjustment that's shown make sense for you? And as I mentioned, using the profit and loss chart to also evaluate adjustments manually. And of course, once again, I just want to encourage everyone, if you have questions at any time, go ahead and send those to us. All right, well, enough of introductions. Let's get over to the PowerOptions tools and jump right in. When you first log into your trial or subscription account, you know that you can customize the available strategies that are shown for you here. Here on this account we have married put, caller, calendar call. We set this up from our last webinar last Wednesday. But the Home tab, the My Portfolio tab, and of course the Other Strategies tab are always locked in place. You'll always be able to access your portfolio tools. Now to start, there are two ways to create a new portfolio to start tracking your positions. We're going to look at the easy way first, and then we're going to look at the more direct, a little bit more complex way. Well, the easiest way is, let's say that I'm starting out and I'm looking to start paper trading a new strategy or a new technique in a particular strategy. So let's say that right now I was going to go ahead and I'm looking to open new collar positions. So I'd navigate over to the collar tab, and we're just going to look at some standard collars here, which this profit and loss profile looks at here. We're going to buy stock, sell maybe 1 month out call that's at the money, and buy an out of the money put option. We're not going to put a lot of time in the research and analysis on this. But if I'm just starting out and I want to start paper trading a new strategy or technique in a new strategy, well, I'll just go into the search tool and I'll set up my search criteria. And then once I have the listed results, let me make sure here we're looking at the right one. No, these are conversions. I don't want conversions. I'm going to go back to the initial value set, standard collar positions. All right, so let's pull up those search results. We'll take a look at just the basic collar. Okay, so we have SanDisk here, and currently I like the second position better. I'm not going to use the single strike strategies, single strike spreads here. It's selling a 46 call against SanDisk, buying a 43 put. Well, let's just use our example of Decker's DECK. Stock's at 36.81. We're shown that we can sell the November 37.5 call for 320, and at the same time we can purchase a November 35 put, 31 days out in time, for 275. This gives us a net premium of 45 cents. Max return if the stock is trading above 37.5 and we're assigned at expiration of 3.1%, and a maximum risk if the stock falls below 35 of 3.7%. Let's say I wanted to track this position to see how it performs over time. I want to see if this is a good strategy or a good way to employ a strategy. So the easiest way to do for paper trades, once we're in a search, we'll just click that More Information button. This is where we do our further research and analysis before actually entering the trade. All I'm going to do is just click Add to Portfolio. Now, if it's the first time, if this is the first time you've ever looked at the portfolio tools or the first time you're creating a portfolio tools, you will only have this top choice available. It'll say New Portfolio Number 1. And what we do here is we put in a name for our portfolio. So for this example, we're just going to put in New Collar Paper Trade. Now what this new portfolio is going to do, it's going to start us off with a cash on hand of $100,000, and we'll just click Insert to create this new portfolio. The system's going to copy over all of the legs we saw for the DECK position. The system knows we are looking at a collar, that we want to enter a collar into our new portfolio. So we have DECK, our stock. Let's keep things simple. 100 shares, 0 commissions. This will be a paper trade. It already knows we're selling the November 37.5 call, and it grabbed the natural bid price for us at 320. So I'll put in one contract, and we're buying the 35 put for 275. Now, if this was an actual trade, and let's say I was able to get filled on the 37.5 call, let's say at 325, and maybe only paid 270 for the put option, you know, taking advantage of the midpoint pricing, well, we would just make those changes. And we're just going to keep this as it was, 320 for the call premium we're selling to open, 275 for the put that we're buying to open. All right, simply click Submit. Now we're going to be linked into our new paper trade portfolio. Where we are is we're in the Portfolio tab now, and we're in the Profit and Loss portfolios. You can see that up at the top here. That's what's highlighted for us. And this is where we're going to track our open positions. Let me remove the position analysis first. Okay. So now in this collar view, where did we start off? Well, we started off with a paper trading portfolio. The system set us up with a starting basis of $100,000. Right now we have a cash on hand of $96,364. Well, that's because the position itself, we can see that down here in our summary, our total net cost was $3,636. That's what we paid for the entire collar position. The net income right now, just taken in from the short call premium, is $320. And right now we have a portfolio return, a small loss in the portfolio, looks like of about $23. But against a $100,000 starting basis, that's putting us at 0%. It's a small fraction. This will be more clear when we look at some already existing portfolios, which we're going to do when we discuss the management process. So the portfolio is going to list everything as a linked strategy. If I entered a position from a search as a bull put credit spread or as a covered call or a bear call credit spread, for example, we're going to have a listing of how many collars we have just in this heading, and then we'd have 3 bull put credit spreads beneath it, 3 Mary puts, 3 covered calls, and so forth. Okay? We have our basic information here, our stock, the original price we paid for it, and the current price right now. So we've actually gained $27 on the stock. We sold the 37.5 call for $320, but it shows us a current price of $350. How is that possible since we just entered the trade? Well, when we ran the search, it based our numbers off the natural bid price for the option we were selling and the natural ask price for the option that we're buying. The portfolio knows that if we went to liquidate this position right now, if we went to sell to close the stock, buy to close the call, and sell to close the put, well, of course, then what the system's looking at, is the natural, this 350 here would be the natural ask price for buying to close the call, and then, of course, the natural bid price for buying to close the put. And we can see the gain and loss monetarily, where we've gained $27 on the stock since we entered the position, lost $30 pretty much just due to the bid-ask spread on the call, and lost $20 on the bid-ask spread mostly due to the put. So we're already behind on this position, and if we included commissions, we'd be behind even more. Well, just on the basic portfolio view itself, it's great to see these numbers and to see where you stand right now, that you've lost 0.7% on the stock, gained 0.7% on the stock, lost 9.4% on your short call, lost 7.3%. But what does that mean for the position as a whole? Well, you can do the math here, and we can add this up. Hey, we're down $50 on our option leg. We're up $27 on the stock, so we're essentially down $23 on the entire position. But why have to look at that and do the math manually? Up at the top here, where we can toggle between our different portfolios, we can select to enter a new strategy. We'll do that in just a moment. We can view months. Over here on the right, we also have a checkbox for Email Portfolio Daily and View Position Analysis. In all my portfolios, I prefer to check that box for View Position Analysis. This does add 6 more columns into our display, stretches the screen a little bit. But what I'm looking at now is if I scroll over to the right-hand side, we see here that we have a total position cost of $36.36. So this is now looking at the total position, all legs of your options position together. My original expected gain, the max return, if the stock was trading above 37.5 at November expiration, would be 3.1%. Our current liquidation value, well, we just did that manually, but now this is done for us. So we're down 0.6% on the entire position, or $23 based on our original investment due to the bid-ask spread of the call and the put. And then we have the 3 columns over here for our expiration value and expiration gain or loss. And we see right now that the expiration gain or loss would be $72 or 2%. We're not projecting where the stock's going to be. What the expiration value is showing you is that if the stock stays at the same price it is right now, $37.08, all the way to November expiration, well, our short call would expire worthless, our 37.5 call, our 35 put would expire worthless, and we could sell to close the stock for $37.08, which would give us a 2% return off of our original investment. So this is, once you check that box for View Position Analysis, you get the bird's eye view of all your different combinations there. So we can say, what is my current position return, liquidation gain or loss? What might the position look like if the stock stayed the same price to expiration? And what was my original max expected return? So anytime we're creating a new portfolio, of course, what we're going to do is start off, if we're paper trading a new strategy, we're going to start off just run your searches and then use the More Information button to link to the portfolio. It'll start you off with a starting basis of $100,000, and then you can track your return with your paper trading. Now, what if we have a real portfolio, which most of us do, but what if we have an actual trading portfolio? Let's say that we have an account at Trade Monster or Thinkorswim or Options Express, Interactive Brokers, and we want to start putting in our positions as they exist. No problem. What we want to do is go into My Portfolio, And in the My Portfolio tools, what I do is click Setup. This will allow me to create a whole new portfolio on the fly. Now, what I'll do is we'll just put in a name. Okay, and we'll call this Actual Trading Account 1017. Okay, well, looking at my actual trading account, whether it be, again, Interactive Brokers or an account at Thinkorswim or what have you, I know that right now, let's say I might have 6 different positions and 6 different strategies, or a couple different positions in a same strategy and then a couple other strategies as well. And I look at my current portfolio at my brokerage account and I see that, okay, well, I currently have $22,000 invested of capital and I have $15,000 of free capital. Well, just using nice round numbers, that would mean that my whole portfolio value, if I liquidated every position I have right now, I would have $22,000 in cash plus the $15,000 cash on hand. Well, I don't want to put that as my starting basis and only put $15,000 as cash on hand. When I'm opening a brand new portfolio and I'm going to copy over what I have in my existing trading account, I put my total portfolio value in as my cash on hand and then copy that over into the starting basis, because as I start adding those new positions in my portfolio, it's going to start subtracting from my cash on hand, so that when I look at all my positions, we'll have that $15,000 remaining cash on hand with our starting basis of effectively $37,000. So I have $22,000 invested and $15,000 free. So that's how I would create a new portfolio. Now, we want to submit changes, and all it's going to do is effectively refresh that page, but it's going to show us our new portfolio has been created. How do I start putting in my positions? Well, now we navigate back over, once we've created a portfolio in the Setup menu, to the Profit and Loss portfolios where we were before. Here we're in our actual trading account. It grabbed this one because this is the newest portfolio we just created, but there's no positions. Now I can choose to go into the search tool, for example, again into collars, or I could go into covered calls. I could try to identify the positions that I have and link it to the portfolio and make changes, but it's easier to do just on the fly. And here's what we want to do. To select strategy, we'll click the drop down here and we can choose to add positions long or short stock, long or short a call, long put, short put, and then we can enter the positions as linked positions. If I currently have a covered call open, let's say that I opened at the beginning of October, I can enter it as a long stock, and then I can add a short leg to that. I can add an option leg to that long stock position once it's entered. But what I don't want to do is track it as a long stock separately and a short call separately, because then they won't be linked together and I won't be able to take advantage of the analysis view for my covered call position. What I really want to do is enter the stock as a straight covered call. So go ahead and select that. Now, as we saw before, it's going to link us to the setup. System knows we selected a covered call, and it knows we have 2 legs. We have a long stock leg, and we have a short call leg. Let's enter a covered call with stock WNR, and we'll just put in 100 shares. And I'm going to change my transaction date. I'm going to simulate opening this position. I know what's in my portfolio at my brokerage account, so I know I open this position at 10-1. We put in a commission fee of, let's say, $7.95 for the stock, and let's say we paid $26 for the stock on October 1st. Now, the system doesn't know what option we're using, but we do. So we're going to click that button there for Select Option. And let's say at the time when the stock was trading at 26, we went ahead and sold the 26 strike call on WNR for roughly, let's say, 70 cents. And we had a commission fee of, let's say, $7.95 as well. Oop, there we go, $7.95 as well. All right, we're going to put this back to 10-1. Okay, so now we've got our transaction as we entered in our brokerage account on October 1st, including the commissions. Once we have that entered, let's go ahead and click on Submit. All right, so now we have our covered call. And the system knew that I had selected the view position analysis for one portfolio, so it's going to keep it for all portfolios. We can see in our details, we started this, a little strange, but we started this, created this portfolio on October 17th, even though we're entering older positions. And we see that our starting basis was $37,000. That's listed for us. But our new cash on hand is $34,454. That, of course, again, the cost of entering our covered call, the net debit, was $2,500, $2,545, excuse me, and 90 cents. And we collected 70 cents for the call premium when we sold it, but we did pay a commission, so we've only have a net income so far in this portfolio of $62.05. And right now, of course, we can see that, well, the stock's dropped down to $25.35. We've lost 65 cents on the stock, lost 60 cents on the call, but that actually works in our favor because we sold the call. Now we can buy it back more cheaply for 5 cents. All right, well, we have other positions that we might want to enter. Of course, then let's scroll over. We can see that right now original expected gain was only 2.1%. Right now we have a loss of 1.4% on the position, or 0.4% if we hold the position all the way to expiration. But any other of those positions that you wanted to enter, for example, let's say we wanted to enter a bull put credit spread. Okay, we'll just go ahead and click on bull put credit spread. Let's say we opened a position on Apple. Well, there's no place to enter in the stock, so what I have to do first is click on select option. Okay. Now it prompts us to enter in a stock symbol, so we'll put an AAPL. Let's click on submit, and then that pulls up the available chains for us. So you have the current month here and all the other months down below. So if I actually just traded a November bull put spread, I'd click on the tile for November 17th, 2012, 31 days away, and that would pull up the basic 5-strike put chain or 5-strike call chain depending on what strategy you're in. If, looking at this, if we actually entered a bull put using lower strike prices, somewhere around the 620 or the 615 or the 610 that's not shown, no problem. Up at the top of the select option dialog box, we'll click on full chain, and that'll open the whole expanse of strike prices, and then we'll be able to scroll through them to select which ones we want. Well, let's go ahead and let's do this for an example. We know, I believe Apple was around $700 towards the end of October, maybe end of September, before it started a slight decline here. But let's say initially when the stock was maybe closer to 700, that we actually sold the 655 put and bought the 650. Okay, so the first selection I'm in, this is the put option that we're buying. So in a bull put, I would have bought the 650. Let's go ahead and put that in. Let's keep the math simple here. We'll do 10 contracts. And let's say we put this at 10-1 again. Commission fee of $7.95, maybe a bit higher, but that's okay. Now we didn't get it at $5.80. We've probably been able to sell the put at this time for maybe, let's just call it, or buy to open, I'm sorry, this is the buy to open. Probably able to buy to open the 650. Let's just call it $3. Okay? And the stock price at the time of trade, let's just put it was around 700. Well, now we have to do our short option. Okay, so we just click the button again. Now we know that we only have the 5-strike chain here, so we've got to expand that. So we'll click on full chain again. And these options were there, but I just want to go through that process again. So if you don't see the strike you want on the 5-strike chain, just click the full chain, and you can always toggle back to small chain as well. So we sold the 650. It was listed there, but I just wanted to go through that example again. Now we're selling the 655. Okay. Now again, we're doing 10 contracts, had a commission fee of $7.95. Now let's say that your broker gives you a break, a discount when you're opening a spread position. So if I maybe paid close to $8 for opening 10 contracts, and $8 here would have been $16. Let's say my broker only charges me $13 if I open a spread through a spread window or through a spread trade. Well, what I would do here instead of that is we would just put in, I could put in just $13 on one leg and 0 on the other, or I could split it up and do $650 and $650 depending on what you wanted to do. All right, so back to square one, a 5-point spread here. We weren't going to be able to get $8.55 when we sold the $6.55 put at the time. Let's say we were able to get $4. Keep it simple, dollar net credit against a 5-point risk, pretty easy. All right, so we've entered in our position manually. You can go ahead and click on submit. Oh, I didn't change the date on the second one. That's good. That's a good thing to show. Okay, so now we have our one covered call, and we have our one bull put credit spread. Now I did make a mistake. What I did is I changed the date for my first entry to 10-1 for the option that we were buying, but I forgot to change it on the second leg. No problem. Now that the position's in the portfolio, over on the left-hand side, I'm going to click the Edit More Info button. First column here, a little blue button next to the leg that I want to edit. We're going to go to Position Actions, and here, of course, is where you can see that we'll do our adjustments. You can choose to close the position, close the leg, edit the position, delete leg, so on and so forth. Rolling the leg individually, or we'll expire the position or close the position when we hit expiration if the options are going to expire worthless. What I need to do, though, is I need to edit the position quickly. Select Edit Position. It'll take us right back to that entry. And, oops, all I need to do here is change the date. Got to change that back to 10/1 for the short leg. And let's click on Submit. All right, and we're all set. Okay, so now we've got the proper trade entry for our bull put credit spread that's gone against us. We've got the dates correct. The price is correct for the option that we sold, the option that we bought. Let's scroll over and see where we stand. Oof, unattractive, isn't it? Since the stock's now trading below our strike prices, we did collect almost $1 in premium, which would have been $1,000 minus our $13 commission. Our maximum expected return was $987, or 24.6%. If we go to liquidate it right now, it's going to cost us $2,076. So it's a loss of 210%. This is effectively what that means is we originally expected to make $987, but the $2,076 we'd have to pay to close the position, our liquidation value is 210% of that $987. And if we hold it all the way to expiration and don't take advantage of the premiums that are left, just allow both to expire worthless or expire in the money, where we'd be forced to buy stock at $655, sell it to $650 to realize a full loss of $4,026. Okay, so it's not a good position to be in right now. This one went against us as Apple is down below 649.16. It would we see, of course, it will cost us $875 to buy to close our short put, and we could get $570 for selling to close the long put. That would result in that $2,000 loss for this particular bull put credit spread. Okay, I'm watching the, you notice I'm pausing at some moments. What I'm watching is the audience view. I'm kind of seeing what you're able to see as I'm working on my screen. And it seems like there is a lag today on the GoToMeeting technology, and I apologize for that. It seems like as I'm working, I'm about a step ahead of you guys. So I'm going to keep watching what you're seeing on my screen there just to make sure that we're on the same pace and I'm not moving too far ahead or discussing something that you're not seeing, because the GoToWebinar looks like their broadband there is a little bit behind, a couple seconds behind. All right. So what have we done so far? Well, we created a portfolio from scratch. If we're going to use a paper trading portfolio, we're paper trading a new strategy, we would just go into our search that we were using, whether it be collars or covered calls or bull put credit spreads, and we would link Add to Portfolio, have that portfolio created for us that is only looking at starting off with a cost base, so I should save $100,000 to use as a paper trading. Or we'll go into that setup menu underneath the My Portfolio tab itself, and we'll create the portfolio from scratch and start entering our positions as we did here. Now, before I go further, we're going to talk about how to use the portfolio to help managing. I went about 25 minutes in, a little bit longer than I thought to just create the portfolios, but we did show other features as well. But for the rest of our presentation, when we talk about what you can do to help to use the portfolio tools to manage your account, I just want to ask one quick poll. And I just want to know, what is everyone mainly trading or researching right now? What types of strategies are you mainly trading or researching right now? Are we mostly looking at covered calls and their cousin, naked puts? Are you trading or researching the protective option strategies, either married put positions, maybe the radioactive trades, or the standard collar positions that we showed earlier? Are you looking at the vertical spreads and iron condors, discussed here, bull put credit spreads, for example, or maybe you're doing bear calls as well? Are you looking at just long calls and long puts, option buying, speculating on a market movement? Or are you focused on time spreads, calendar spreads, diagonal spreads, or the, it says vertical spreads on that last choice. It really should say horizontal spreads. I always keep forgetting to correct that. And when I correct it on the fly, it doesn't save. All right, well, we've got about 60% of our votes in. That's great, still increasing. So I'm going to leave this open for another 10 seconds. If you haven't voted yet, I encourage you to do so. Let me just jot this down. Verticals, longs, time. Okay, great. All right. And Gary texted in and said naked puts. Good, good. Okay. I want to make sure we take a look at those as well. All right. So let's go ahead and close that poll, folks. We've got some more things to cover here. Let me share the results with everyone, see where we stand. I've got 46% of you are doing covered calls and naked puts. Great. 23 doing the protective option strategies, 23% doing vertical spreads, 23% doing long calls, and even 8% doing the time spreads. All right, fantastic. I'm going to try to cover an example of each one of those if possible, if time allows, but you'll get the general idea even if I don't get to one of your particular strategies. Let me go ahead and hide those results. Let's go back to our profit and loss portfolio. Now we're going to start off with these positions we just entered, because I entered these positions as if I would have opened them on October 1st. Both of them are using October expiration cycles. So this will allow us to cover some brief views of covered calls. We'll look at another 2 covered calls in our other portfolio that I had planned today, as well as collars, married puts, and we'll create some long calls and some time spreads so we can showcase those as well. Now it's a very interesting thing here. Even though when I entered this WNR position, I didn't put in any alerts of any kind or any notes, but I see that I do have an alert triggered. Our third column here is the alert section, and we have an alert triggered here for WNR. We don't know what that is. Well, let's take a look. What I can do here, we click on the view link in the alerts column next to our position, and this will take us to the alerts page. Now, a default alert that we here at PowerOptions set for any position where you're selling premium, whether it be part of a bull put credit spread, part of a calendar spread, or part of a covered call, the short call in the collar, the short call maybe in a married put position using income method number 1, for example, we have a default alert set in those positions for an option decrease of 80%. Why? Well, it's a common rule for covered call investors and even spread traders that if your short option has dropped 80% of its value, you might want to consider closing it. Sort of the 80-20 rule. I've made 80% of what I expected to make on that position. I might consider closing the call now, closing the whole position, or rolling the position at that time. So that's set, but if I wanted to remove it at any time, if I saw that alert and said, oh, you know what, I'm just going to hold this to expiration, I don't need to be alerted, I could just uncheck the box here and remove the listing for the percent option change. And we're going to keep that in there for now. Okay, covered calls and naked puts would appear the same. You can set alerts for change in the stock price. So if you enter a covered call, I bought stock, I think in this case, yeah, we bought WNR at 26, we sold the call for 70. We know that technically we have a break even at expiration with 25.30, call premium minus the stock price. So I could put in that as my lower stop limit. I'd be notified if the stock drops below 25.30. Or I could do a percentage. I want to be notified if the stock drops by more than 5%. Upper limit, the max return we could make on this position, we sold the 26 call for 70 cents. So max we could make is 26.70, of course, at expiration when we get assigned. Getting assigned to 26, I'm sorry, keeping the 70 cents. So if I would consider rolling the position, if the stock started to perform well, maybe went above $27, I could put that in as my upper limit also. Now the second leg, the short call, we can put in a variety of alerts as well. Again, stock price limit, stock percent change, we already did that. The option ask limit, if I wanted to be notified if our call option dropped to or below 5 cents per share, we'll plug that into the lower limit. Or if maybe it doubled in price, it went above $1.50, maybe I want to be notified of that as well. And then you can set that, of course, for the ask time limit, dollar amount or percentage. Here's a good one, days to expiration. I want to be notified if I'm within 4 days to expiration. Okay, in addition to that, with the linked trades, covered calls, I mean even naked puts, but linked trades, covered calls, collars, married puts, if I want to be notified of the position change as a whole, if I'm down more than 4% on the total position, including the liquidation of the stock and the liquidation of the option, I'm going to plug that in. Now, a lot of my searches for standard collars that I trade, I will typically use a filter when I'm in the PowerOptions search, looking only for stocks that are trading above their 50-day moving average. I'm looking for stocks that are currently in an uptrend. Well, down at the bottom here, we can set a variety of different fundamental and technical alerts as well. I'm waiting for the screen to catch up. Here we go. There it goes. Okay. And what I want to do here is that since I opened this position perhaps when the stock was above the SMA 50, I may want to be notified if the stock drops below the SMA 50. Or I can even set another SMA if I want to be notified if the 50-day moving average is now trending below the 100-day, or if the 100-day is now below the 200-day. You can use that as well. You can also set alerts for Bollinger Bands if your stock hits a new 52-week high or a new 52-week low. Things I like to use for my collars, and of course, actually all my positions, but also my collars, days until earnings. If I'm within 3 or 4 days to earnings, I want to be notified. And if I am tracking a dividend-paying stock as a covered call or as a collar, and I want to avoid early assignment, I probably want to know if I'm within 5 days of an ex-dividend date, because I don't want to be right at the money or slightly in the money coming up to that ex-dividend date, because I might risk early assignment on the position. And if I want to stay in it, I don't want to risk getting assigned. I'd probably want to roll that call or buy to close it pre-dividend if I wanted to hold the stock long term. All right, so now we've set some of our alerts. I'm just going to go ahead and click Save. And this will take us back to the profit and loss portfolio. Now, some things changed. We see now that we do have columns here for an upper and lower stop limit. So there's our prices for the upper and lower stop limit. We're not quite at our lower stock limit of the stock at 25.30 because the stock's at 25.33. And the current ask price of our call is at 10 cents, so we haven't triggered either of these. We still have an alert triggered when we know what one of those is, of course, and that's still the, let's go back to the view column again. We've got a couple now. Days to expiration, well, that's one of the triggers. We're 3 days to expiration, so that showed up on the alerts page for us. Simple moving average has been triggered. The stock is below its 50-day moving average, and then, of course, we had that 80% change in our call price as well, also listed. All right, so set some alerts here. Now, what do? Well, if an alert's been triggered, something that we set as an alert has been triggered, we're going to want to make an adjustment. Let's go back to the profit and loss portfolios. I want you to pay attention to something here because we're probably going to we're going to do an adjustment here in a second. But we've got an effective cost per share here for a stock of $26. That was our original purchase price. Just remember that. Okay, so now our alert's been triggered. 3 days to expiration. Stock's fallen. We've got a liquidation loss right now on our WNR covered call of 1.5%. Can we maybe potentially roll this to get a profit? Let's find out. To analyze rollout opportunities or adjustments, we'll go into that more information menu again. I want to go to position actions, and we're going to select position analysis. All right, now the position analysis screen, this is going to give us a breakdown of our current position. We have at the top our breakdown of our trade, 100 shares of WNR at 26, sold the October 26 call for 70 cents. We see the current prices and our commissions. Our break even initially was 25.46. The stock is trading below that. See the current option ask price for our call is 10 cents. Delta is at 0.25. The time value left in the premium is 0.4%. Common rule for covered call traders and naked put traders that you might want to use as an alert, you can if you want to, is that if the call has dropped below 1% of time premium from when you sold it, or if the naked put has dropped below 1%, that's another common trigger that's used by covered call naked put investors, as well as that 80% rule. Of course, we have 3 days left to expiration, and we have our profit and loss chart. All right, now on the position analysis screen, I scroll down a little bit, and we can see some more of those detailed information. For our covered call, original expected return is 2.1% if the stock was above 26. We know that's not the case. Current liquidation value, there's what we saw before. We're at 1.5% after 16 days, a loss of 1.5%. And our future expiration, meaning if the stock stays right where it is at 25.33, well, we'd keep an extra 10 cents premium from our short call, and so we'd only have a loss of 12.90 or 0.5%. But down below that, we have our rollout opportunities. Okay, I'm going to scroll down here to some of these. We're going to have a brief discussion about the adjustments. So I'm only going to focus on the Novembers. It does show December's and January roll opportunities as well. But in general, for me personally, if I've sold a covered call 30 days out in time when I look to roll, I typically try to keep it under 60 days. Yes, a lot of times if the stock has moved up, you might want to try to roll for a credit, but if it's moved up, you may need to go 3 or 4 months out. I'm going to show an example of that after we take a look at that credit spread as well. Okay, but what are we looking at here? Well, we originally had a hope of a 2.1% return. That didn't work out for us in this covered call. We're at a 1.5% liquidation loss or 0.5% at expiration. we're shown that we can buy to close our October 26 call for 10 cents. We could get defensive and sell an in-the-money November 23 call for $2.65. Now this gives us an adjusted net credit of $3.25. What does that mean? Well, remember, we originally sold the call for 70 cents. We're buying to close our current call for 10 cents, so we keep the 60 cents from that original October trade, and we can collect $2.65. Now, so that puts our new adjusted credit at $3.25. This makes our new downside protection 12.5%, and a potential return of 1.1% if we're assigned at 23, and that's a 78.3% probability that we'd get assigned, that the stock would stay above 23. Well, let's go ahead and take a look. Does that make sense? Well, it's great to see things numerically, but what I want to do, and we're in the position analysis menu, we're looking at the rollout opportunities. From the rollout opportunities, great to see it numerically, but if I want to compare it graphically, we'll go to Simulate Trade. Okay, and so this just gives us a breakdown of our current position. We know where we stand right now. The current return is about a loss of 1%. Our max expected return 2.1%. And if we perform this adjustment, we buy to close our 26 call for 10 cents, sell to open the November 23 for $2.65. Max profit is about $17. Well, this is protective and defensive, but maybe that new return, that potential percent return if assigned, doesn't match your goals. Well, that's all right. Let's go ahead and close this one down. It's just the first one that was shown. And let's take a look now at where the stock was trading at 25, was it 33? There we go, okay, 25.33. So I may want to go right at the money. I may want to try to convert this. I do have a 1.5% loss. We got the stock at 26, sold the 26 call. We probably thought it was an uptrend, but hey, it pulled back from us about $1. So maybe now what I want to do is evaluate this at-the-money call. And the reason why I'm looking at this at-the-money call, remember we started with an at-the-money position, so maybe I want to keep this as an at-the-money call. All right, so we buy to close our call for 10 cents. We can sell the November 25 for $1.35, adjusted net credit of $1.95, still a decent downside protection for the next 30 days, reasonable potential return if assigned, if we're right, over a 2-month period, 4%. So we are cutting down our return to an average of 2% per month for the October month and for November if we do happen to get assigned, and 54% probability. Okay? And again, just use that more information button next to our 25 potential rollout opportunity, 25 call. We'll go to Simulate Trade. Now we compare the positions side by side. Same view over on the left in red is our current position where we currently stand up. The screen isn't caught up yet. Give me 1 second here. You're probably seeing the search screen now because it just defaulted back to that, and it's there we go. Okay, now you should be seeing the comparison. Over on the left in red is your current position. Over on the right in blue is what the new position would look like if you perform this adjustment, and then you have the profit and loss charts beneath it. Okay, well I started with an at-the-money trade. This apparently didn't work for me. The stock pulled back, but maybe I think it's kind of hit the bottom and it's still a good stock going forward. I'm comfortable with the 4% or the 3.6% return. Why is it lower here? Because it's actually taking into account the commissions that we use for the original WNR trade. Instead of the 4% we saw in the rollout opportunities, this is taking into account, this comparison here in Simulate Trade, the commission costs. Okay, so this looks like something I want to do going forward because I think maybe WNR has a good potential of staying above 25. This pullback it's had is done. Maybe I think it's hit the bottom. Okay, so what do we do now? Well, I can go back to the profit and loss portfolio and perform this adjustment manually. But hey, we're going to make things simple. This is the roll I want to do. And, here's my buy to close the 26 call for 10 cents, sell to open the 25 call for $1.35. Buyback commission, let's say it increased up to $8.40 if I buy to close the call, and the new call I'm selling will keep at $7.95. Or again, if I get a discount for rolling a call, I don't pay the same commission when I'm rolling a call as if I entered each leg individually. My total commission would be about $11, I think. So again, I can just put that in as one commission for the total tally. 0 here. Let's submit change to portfolio. All right, we're going to go back to the profit and loss position. We still have alerts triggered. Why? Well, remember, the stock's still below the SMA 50. That didn't change. We changed our new call strike. We made an adjustment. We don't have an upper and lower stop limit set on our new call yet. So those aren't showing. We kept the upper and lower stop limits for our stock. But the alert's showing because we still have that alert that the stock's trading below the SMA 50. But again, I performed the roll maybe because I think the stock is at the bottom of this trend, this pullback that happened once I entered it, which by the way would always happen if I entered a covered call or naked put. I know the stock's going to go down in price. But anyway, here's our new position. Now, we still have stock ownership. Our effective cost per, our original price is 26. We have our new November call at $1.35. Yes, we're losing a little bit on it now. Bid-ask spread, it's at 140. So our new call is down $5. But notice here that our effective cost per share has changed to $25.59. That's taking into account our closed position and all of the commissions that we paid when we originally opened the covered call and then rolled the legs. This is now accurately counting what our effective cost per share is on the position. And so now when I use the profit and loss chart, for example, I go to see where my position stands right now or go back into the position analysis menu. We go into the profit and loss chart there. It's basing it, the new view of our position is basing it off of our effective cost per share, so the potential return that's available and so forth. All right, let's go ahead and close that down and go back to our position, profit and loss position portfolio. What happened to my closed positions? Oh, I'm sorry, I was reading a question from Robert. Robert, I'll show you in 1 second, Robert. Okay, so what happened to our closed call? Why don't we see it anymore? Well, the profit and loss portfolio only tracks open positions. If I wanted to view what this portfolio looked like with all positions, I could go into the historical reports. This gives you a bird's eye view. Here's my closed position. Oh, I'm sorry. Yeah, here's my closed position. That's showing me the stock. Remember the call, we originally collected $62.05 for it. Well, that was based on the 70 cents minus the commission costs. And right now, I'm sorry, when we closed it, it was at $21.40, so we had a gain of $40.65. Now, this is mixed in with our other open positions. I can toggle here. We're in the historical reports. We have all positions. I can just look at realized gain or loss or unrealized gain or loss. But this is looking at the portfolio, the open and closed positions as a whole. And so all my closed positions will have a gain or loss listed, and then we'll have NA for those that are still open. If I want to view the WNR position and where I stand right now in a different view, I'll go to the analysis. And here's my Apple bull put spread. We're going to take a look at it in a minute. And then WNR, here's where this, the two positions that are highlighted in red are my current open positions. And there's my realized gain on the 26 call that we bought back for a cheaper price. Okay. Now, we see the loss for WNR total is still $39. We had that $40 gain for closing the call. We have a $5 loss on the new call we have opened. We're down about 75 cents on the stock price, our initial stock price. So there's our $39.30. But here's a total running gain and loss for the portfolio as we're getting destroyed on that bull put credit spread. Okay, let's go back into the profit and loss menu. So when you close positions, when you roll legs, you're still going to be able to view them either in the historical reports. I personally prefer to look at the analysis so I can see a running tab on each position as I make several adjustments over time. Let's go back to the profit and loss portfolio. Robert's question was, can you show how to get to those other trading positions? I'm assuming you're meaning the rollout opportunities. Yes. Anytime you're tracking a position in the profit and loss portfolio, Robert, all you have to do is click the little blue button next to the position. And this is where you can do your further research and analysis, look at the chart, the company information, the news, and so forth. I'm waiting on the screen here. It's coming up. There we go. All right, so the little blue buttons to the left, Robert, that'll pull up that window. What I want to do is go to Position Actions, and this is where we make any of the adjustments. I could have manually rolled the call leg if I wanted to, but it was easier to use it just so that simulate trade. And then I'll go from Position Actions. We want to click on Position Analysis, the first selection there. This pulls up our second window here, where we have a breakdown of our existing position. I'm waiting on the screen here, folks. Just give us 1 second. My screen's up. There it goes. Okay. I'm just looking to see what you guys are seeing at the same time. All right. So there's your liquidation value, your future expiration value. Now remember, these numbers are different because of the call premium, the new call that we sold to. It's not the same view we had initially. And then below that, you'll have some rollout opportunities. The system says we could still continue to roll this call. We don't want to because we just did, but there are some opportunities there as well. So it's through the Position Actions menu. All right, so that covers covered calls. Whew. I stumble every time I try to say that. That covers covered calls. Okay. Now, let's go back. What about our bull put credit spread? When we know we're getting slaughtered on this particular trade, let's go ahead and take a look. We'll do the same function. I want to go to position actions from our bull put credit. I want to go to position analysis. Are there any adjustments that the position is showing for us? Well, there's our profit and loss chart. We wanted Apple. Oh, sorry, waiting for the screen to catch up, folks. Give me a moment. There it comes. Okay, there we go. Here's our profit and loss chart for our bull put credit spread on Apple. We wanted the stock to be up here. We wanted it to be above 655. That didn't happen. It's gone through both strike prices. We're effectively at full loss on the bull put credit spread. So let's scroll down here. Yeah, our liquidation loss right now is 2,176, and the expiration profit and loss is even worse. Now, this is showing us some Condor opportunities, but they're only 3 days out. I don't think this would be effective because there's so much short time left and it's not helping us repair it. But it is showing you some Condor opportunities. And some of the credits are so small, it's only 3 days away. Okay, so I was scrolling through some 11 cents. Let me grab this one with the, let me grab this one with a 53 cents credit. Of course, that's not going to really help us repair the position, but it's an idea. Let's take a look. It's saying we could sell the October 665 call and buy the 675 for a total of 53 cents. Now a 10-point spread, but let's take a look again. It's great to see it numerically. I want to take a look at it graphically. All right. Well, here's the Condor, and what it would show here, of course, if it continued on the profit and loss chart, it put the center where the current stock price is with this down below where we are. Excuse me. But what we see, the red is showing our bull put credit spread, which we know would do this as we continued on. But if we're selling the 665 call, what we're going to start seeing here is on the other end, we'll drop down and we'll probably have something that looks like this, going further to the right of the chart. All right, so does this help repair it? Not really. We generate another 53 cents or so, or $530, but remember we're already down $2,000 on the position. So this is just an example of one thing that might do. It shows a Condor opportunity, converting your bull put to a Condor, but I don't know if that makes the most sense with only 3 days left to expiration. Oops, sorry. There we go. Let's go back here. Apologize there. Let's. What I need to do is just. I'm going to do one thing real quick, folks. There we go. Okay, that's better. All right. So maybe we didn't see an adjustment we wanted. Maybe your thought is, well, I think this pullback has happened. I may want to do just roll down the spread. Not always a good idea, in my opinion. It's like catching a falling knife. But can we simulate manually what this would look like if we liquidated this spread and maybe sold to open an out-of-the-money bull put credit spread in November? We can run that manually. We didn't see it in the rollout opportunities. But now if I go to the more information button again, let's go to profit and loss chart. And this pulls up the current position. We bought to open the 650 for 3, sold to open the 655 for 4. We know we're in our loss, and we're effectively at full loss for the. Actually, we're only at a 50% loss. Remember, our full loss is still $4,013. Oh, sorry. There we go. Screen's caught up now. Full loss is $4,013 on this paper trade. But right now we saw we could liquidate for about half that. I believe it was $2,600 or so. Okay. $25.23. There it is. All right. So right now $25.23. Okay. But can I get out of this for a profit? Most likely not, but some investors will think, oh, well, the stock's now trading at 648. You've got the full loss. Just roll your put down. Roll to a new spread. Roll out. All right, well, let's take a look at that, shall we? I'm going to go into View Options. This is the manual, doing an adjustment manual. I can click on View Options above our custom spread view. Now, what do I have to do first? I've got to close the 2 legs I have open. So I'm going to select the October series. This pulls up all the strike prices. And here's that 655 put and the 650 put. You see in red it's already added. Well, I'm going to click on each one again just one time. I'm going to click on the 655 put and click on the 650 for October. All right, let's go back. What did that do? In my 6-block section, What that did is it bought to, put in again the 655 put in the 650. Now what would I be doing here? Well, if I'm liquidating, I'm buying to close the 655 put, 10 contracts, and we are selling to close the 650 put that we opened. Again, keep it at 10 contracts. Okay, so let's submit that first. We should just see a straight line profit and loss chart that's negative. Yeah. So there's our loss here. It shows us, what it's doing is it's saying, okay, you've no effective options open. You'd have a loss here of 31% or 2250. Okay, actually it's more closer to that 200% of the 987 we expect it to make. But that's what it looks like after we close the position. Okay, well, what do we want to do going forward? We've already taken the loss. We're liquidating for a loss. But now I want to consider, hey, let's go to November. And yeah, the stock's pulled back from 700 when I looked at the position October 1st. But now I expect that it's going to stabilize or move up. So with the stock trading around 648, I'm going to sell the 640 put. So we'll add that. And I'm going to buy the 635. Keep it as a 5-point spread. So I'll click add on that one as well. 1 second here. Waiting for the screen again. It looks like it's paused for you guys. Okay. There it goes. Okay, so I'm adding in the two. We went to November, and I'm adding in those two puts there. And what are we doing here? We're selling to open the 640, buying it. So we're doing this manually. We're doing an adjustment manually using the custom spread tool. And let's click submit. That's what I figured. So even with rolling now, this is showing us at the halfway point. Let's see what it would look like. Even with rolling, we're still at a locked-in loss of 250. Now, got to be honest, if we liquidated right now, we knew we had that loss of $2,250, $2,250 roughly, but here we've negated that by a factor of 10, so a negative loss is only $250, excuse me, but that is the best case scenario. You think, okay, well, if this one expires worthless, I could do that again, but what happens if the stock falls in the next 30 days and it goes below your 640 and your 635? Well, now you're in the same position. You're taking another $2,000 or hopefully not a $4,000 loss on the position. All right, so that's a manual adjustment. Now, a lot of questions I get, I'm going to do a collar real quick, and some of these things are very simple. We'll do a long call for you guys. So verticals, covered calls. We're going to look at a collar real quick in a sample. So we're going to go to my portfolio, back to profit and loss portfolios. We're almost at 1 o'clock, so if anyone has any questions, I'm going to encourage you to go ahead and send those in so we can handle those. We'll try to wrap up by about 1:10, maybe 1:15. But if you have some questions, go ahead and start sending them in, and we'll start taking a look at them. All right, now what I'm going to do is I'm going to go back to the profit and loss portfolio, but I'm going to change portfolios. Rather than look at our actual trading account, I want to go to position adjustments. Okay, so we covered a covered call that had dropped in price. We've got 2 covered calls here that have moved up in price, so we could look at the rollout opportunities moving above, but I think fairly simple. We'd do the same process, right? We'd go to position actions and position analysis. This is a covered call for PXP with the October 37 call, and the stock's now at 38.37, so it's going to get assigned, but we could contemplate rolling out to the November 38, maybe the November 39 for credit as well. But I want to look at the collar here. A quick collar view. This is what happens here when you pick the right stock. You picked a bullish strategy, but it exceeded your expectations. Walter Energy opened 928 with a stock at 32.40. Sold the October 32.5 call for $1.65 and bought the October 30 put for 75 cents. Standard collar view. And our original expected return, of course, was 3.2%. We could liquidate right now for 2.7%, or hey, we can get assigned and earn our return. Now, this looks like a favorable position, and it is, but what if the stock exceeded your expectations? As in this case, Walter Energy did. By the way, this is an actual trade of mine that I'm in. I'm going to make 3% on this October position. However, look at what the stock did. I expected the stock to be trading above 32.50. But I didn't expect it to go up to almost $38 per share. It's been bouncing around between $35 and $38 for the past couple days here. I picked the right stock. Unfortunately, I picked the wrong strategy, meaning I would have been better off taking this as just a straight married put position or maybe a long call position or something along those lines. Collar's going to be successful, never look a gift horse in the mouth, but I didn't take advantage of this other 17% movement in the stock price because of that short call. But okay, what do we do now with this position? We still are strong on the stock. We're still bullish on the stock, and maybe we want to try to get into a better position or increase our return from 3%. Well, let's again go to position actions next to my position, and I want to select position analysis. All right, so there's our position. There's our profit and loss chart. We know where we stand right now. There's our gain, 2.7% if we liquidated right now. Something is shown too. I didn't get a chance to show this in the covered calls. For covered calls, naked puts, collars, I have a view here in that current liquidation value. It shows me the liquidation profit versus expiration profit. What that means is if I liquidated right now, I've effectively made 86% of what I expected to make. So I might want to use that as an 80-20 rule as well. Okay, but down below, what it shows us is the rollout opportunities. My price of a call has increased by 50%. Therefore, we consider buying to close the long call for 555 and rolling to a higher strike. So this is effectively just showing it as a covered call. So we could buy to close our call and then sell the November 40 call. Don't know if I would do that just because it's too far out of the money. The November 42.5. I'd be focused more on a different strike. Perhaps, but what I can do now is we can go to simulate trade again. I'm sorry, the November 40 call would increase our return to 13.2% if we were signed at 40. But the stock needs to go up another 2 points for that to happen. Our probability is only at 38%. Well, those are the numbers. Let's look at it graphically. Is this something I'd want to do? The answer personally is no. And I know this graph is showing it, but it's still because there's 3 days to expiration. All this is showing me is a rollout opportunity for rolling the call. Yeah, if the stock goes above, let me get the arrow here, folks. If the stock goes above 40, I'll make that 13.2% if I'm assigned. But it's such a low probability. And this is only rolling the call. So in 3 days, this put's going to expire. I'm honestly, it's still open now, so that's why it's showing the break here where we continue over to the left-hand side and we've got that limited loss. But 3 days from now, I don't have that put anymore. So my effective loss could be greater if WLT pulls back from this position if I sell the 40 call. Okay, so not something I want to do. I started this as a collar. I probably want to keep this position, as a collar. Okay, so let's close this down as well. I'm sorry it keeps going back there. But let's analyze something very quickly. I want to roll this collar, and I know kind of what I want to roll to in November. I have it in my mind what I want to do. I didn't see it in the rollout opportunity, so I want to do it manually. So let's go back to position actions. Go back into profit and loss chart. Remember, when I want to do a manual adjustment, this is the adjustment I'm thinking. Let me see what it looks like graphically. I'm going to use the profit and loss chart to show me that. Okay, now, first, what am I going to do? I have to buy to close my 32.5 call and sell to close my 30 put. So again, we go into view options up at the top. Go to October. Got to click on the 32.5 call again. Click on the 30 put. All right, so what am I doing? The 32.5 call, we have to buy to close it. One contract. I'm just going to use the natural ask price. Sell to close our put. One contract. Okay, so let's take a look at that. Submit this. Now, there's a subtle issue, isn't there? Well, okay, the natural bid for the 30 put listed at 0. I'd probably get at least 2 cents, so let me change that up at the top there. But because I wouldn't get 0 for it, or I may just let it expire and save a commission. But let's say I do sell to close my put for 2 cents there. Okay. Now, what this looks like now is just a straight stock, isn't it? And what I can see here is that on my net debit for my 100 shares, my total cost is $37.03. So what I'm doing here is I'm saying, okay, if I buy to close this call now and sell to close this put, I'm effectively holding a long stock with a cost basis of $37.03. Okay, now, the stock's at $37.91. Well, I might potentially sell the, see what's available. I might sell the 37.5 or the 38 call and maybe buy the 35 put. Keep it as a collar. Okay, well, let's see that. What would that look like? Uh-oh. I'm out of space. On a multi-leg strategy, I've ran out of space. I can only put in one more leg. Well, instead of doing that, what I'll do in this position, and yes, before anyone asks, the programmers are working on something where you can have more legs or add multiple legs into this field. But for right now, we only have these 6 legs. That worked great for the sample of rolling that vertical spread. But in the collar, we have 3 legs. Now we have to keep the stock legs, so we're short 1 leg for creating a new collar. But that's okay, because now in this position, I know something. With the original premium I received, the put premium I purchased, what I had to pay to buy to close the call at $5.55, and what I got for selling the put, the 2 cents, hopefully, something along those lines, I'd be left holding shares of stock at $37.03. Well, that's all we have to do. Let's use that as our basis. I'm going to clear out all the other legs. Just hit clear on the side, and I'm going to change my effective cost per share on my stock to $37.03. That's what I'm left with, 100 shares at $37.03. Now let's go into View Options, and let's go into November. Okay, well, I have 2.5 strikes. If I'm bullish, more bullish on the stock, we could do a combination of maybe selling the 40 call and buying a 37.5 put. That doesn't look good to me. I'm going to see what would happen if I sold just the in-the-money 37.5 call and bought the 35 put. Now, before I hit submit, I've got to make my adjustments here. So I come back down here. We're going to sell 37.5 call, 1 contract, buy the 35 put, 1 contract. But before I do that, what do I have to remember? What do I have to go back and remember? I have to go back and say to myself, I know that right now I can liquidate this position alone for 2.7%, and if I leave it to expiration, I'd leave it for the next 3 days, and I'm assuming the stock's going to stay above 32.5, we'll make our full 3.2% profit. Okay, so I have to keep that in mind, because now as I submit this, for the next 32 days out in time, if we enter this position, we now have a collar with a potential max return of 5% if the stock stays above 37.5, and we're only risking 2%. Okay. Now the reason I specifically brought up this one is because not only helps me to evaluate what I'm going to potentially do with this adjustment with this position in my personal account, but it's also to illustrate something. Remember our original profit and loss. If we let this position, the Walter Energy collar, be assigned, we will make 3.2%. Okay. If I roll to this November series, roll to the 37.5 call and the 35 put, I can make 5%. That's going to increase my potential return to for the next 30 days, we'll make another 1.8%. Now right here, I have to ask, does that match my goals? If I'm opening a standard collar position, when I open my collars, I'm looking for a minimum return 30 days out of 2 or 2.5%, let's call it 2.5% or more. This isn't matching my goals. This roll, even though, yes, it's increasing it to 5% for the next 30 days, but that's really 5% over the last 60 days. If that doesn't match my total goals for this position, or increasing from what I could get at expiration from 3.2%, increasing it only to 1.8% in the next 30 days, that doesn't match my goals, I'm probably not going to enter this trade. Now, personally, I really like this breakdown of now potentially having an increase of 5%, but I'm only risking 2% if I stay in this position. But remember what can happen. If the stock pulls back and drops below 35, I am protected to a loss of only 2%. I've effectively reversed what we normally expect to see in a standard collar, where your risk is about 5%, your return's about 2.5% or 3%. We've reversed that. But by doing this, I might take on the risk of suffering a 2% loss if the stock does drop below 35, instead of just taking my 3.2% return if assigned at expiration. This is what we all balance with, right? And this is when we get to expiration, whether your stock has moved up or moved down, whether you're bullish or bearish, you're faced with 3 positions. Do I leave it alone and let it expire and take the loss or take the gain? Do I roll the position? And if I roll the position, does the roll match my return goals? Never roll for the sake of rolling. And that's something I always harp on. But if my goals with standard collars in my portfolio are to make 2.5 to at least 2.5% return every 30 days, this roll going from 3.2 to 5% max return if assigned if the stock stays above 37.5 is not meeting my goals. It's only 1.8%. So I'm not going to roll for the sake of rolling. I may just let it get assigned, take my 3.2%. By the way, when the webinar started at 12 o'clock, or 11:45, I was running through this example, this actual trade in my portfolio that you're looking at now, and the stock was actually only at 37. It was roughly trading at about 36.60, 36. At close of business yesterday, it was trading at 35. The reason why I bring that up is because this looked much more attractive. The increase for potential percent return was up to about 6% before the webinar started, with a loss of only about 1.1% if I was wrong. So that did match my goals, and that looked like an opportunity at that time. Since the webinar started, the stock's moved up another 90 cents or so, almost $1. It's now trading at 38 just in that short hour. All right, so, but that's my evaluation. I might look at this later this afternoon if the stock pulls back, or look at it tomorrow and see if it makes sense. But right now, doesn't look like a good roll opportunity for me. I'm better off taking the 3.2%. All right, David, I'm sorry, your question came in. Where do I find the probability of expiring and standard deviations? Well, we don't show the standard deviations, David. What we do show is the probabilities for each one. And the quickest way for me, if I want to see the probabilities, if you're looking to roll, of course, that's where you'll show it. It'll show all those rollout opportunities as we saw before. Let me go to the, hey, let's go to the PXP position, the call there, position analysis. I want to show something else real quick for some of you others also. So if I'm evaluating a rollout opportunity, you're showing that probability above. If you're rolling to a new call, a new short call, you'll be able to see it there. That's where your analysis is. David, I didn't know if you meant the current one. Honestly, if I'm looking at my portfolio as we were, I'm sorry, some of those positions, sorry folks, some of those positions that we were looking at earlier with the, with that collar spread, I'm not really concerned personally. I understand you might be, but I'm not concerned right now personally of what is the probability in this case of the 32.5, the stock staying above 32.5, because I'm already sold that it's 100%. If you were talking about when we were in the profit and loss, because it doesn't show the probabilities, it's just doing the numerics. That profit and loss chart is done to show the numerics and the calculations monetarily. But let's go back real quick to that profit and loss chart. I'm going to use this example in a different strategy to show something else. Okay, let's very quickly, let's just do the call for you there. Let's see here, 32.5 call, I'm buying to close it. And then I'm going to roll to the November 37.5 call. Okay, so let's buy to close the 32.5, sell to open the 37.5. Just look at the call very quickly for our caller. Ignore the put altogether. All right, so on this chart, you're asking, well, what is your new probability now that the stock will be trading above 37.5? It was shown in the rollout opportunities, but it's not shown here. And you're right, it's not. It's just showing the numerics here and giving us a profit and loss chart. But real quick, if I wanted to see the probability, I can just go to research. So what I'm doing is I'm clicking next to the link. If you want to know the probability for the new November call that you're selling, delve deeper into it. Go to research, and I'm going to go to option research. This is all the data we have for that 37.5 November call, and right up at the top on the right, your probability above 52.5%, probability below 47.6, IV, the IV over HV, the IV over SIV, all the other data you could possibly want is right there. So it's an extra link, I understand that, David, but that's the easiest way. Just click the little blue button on the profit and loss chart next to the leg you're interested in, and just go to research and option research. And that'll also allow you to see all the other information as well, that implied volatility we saw and everything else. All right, I want to go back now to the profit and loss portfolio. I'm going to add a new position very quickly, looking at Walter Energy. We know that on 9/28, we sold the October 32.5 call for $1.65. Okay, well that meant we could have also bought on 9/28 the October 32.5 call on Walter Energy for probably $1.70 or $1.75. Let's just do that for our long call traders. Select a strategy. I'm going to enter a new position, and I'm going to enter long call. Okay, now same field, but it doesn't know what we're looking for. Got to select option. Hey, we've got to put on our stock symbol, WLT. Let's click submit. There's our chain. 32.5 is not shown for October. Okay, no problem. I'll go full chain. There we go. There's our 32.5 call. Let's add that. Number of contracts, let's keep the math simple. One contract. Transaction date would have been 9/28. There we go. Zero commission, cheap, this is a paper trade. And what did we say? All right, let's take, $1.75. That would have been the ask price. Stock price at time of trade, hey, we knew that too because we got into the collar. That was $32.40. All right, let's go ahead and click on Submit. So even for long calls or long puts, the position analysis worked for you. So what do we know? We've made a killing on this call. Bought it at 175. Current ask price is now 535 on the position. And so we've got a return right now of about 205%, a return of $360 of unrealized profit, and an investment of 175. Okay, but what are some of the other things we can do? As we did before, next to my long call, position actions, position analysis. Oops, I didn't like that. Sorry, folks. There we go. Okay, there's our long call. Current ask price is 535. I'm sorry, current bid price 535. My apologies. Days left to expiration 3. There's our return. Here's some rollout opportunities. Now, at times, this one here has a very short expiration. We just selected the October. So you might say, well, here are rollout opportunities. It's showing us that we can roll these positions. We can buy to close, sell to close, our short call at 535, and buy to open maybe a November call at 280. And this percent range out of the money and maximum risk. Now, what am I looking for here? Really liking this negative maximum risk. Why? We'll show you in a second. Okay. Now, you might say, oh, well, why aren't there any opportunities to sell a call and create a calendar spread? Because remember, in this example, we chose the regular October option. It wouldn't make any sense to sell a short call against it for only 3 days. You might find some premium by selling the 37.5 call right now, or the 35 might help you with that. If we had put in a November call originally, that we bought a November call or December call, we would see some opportunities here to create a calendar spread. If we had the December call, we could sell the November, or maybe create a sort of bull call debit spread by selling December and saving November. But all this is showing us now is rolling the call. Well, why would I want to roll the call? Well, if I'm so bullish on the position, what would happen? Let's take a look. If we sold to close our October 32.5 call at 535 and bought the November at the money 37.5 call for 280. Let's compare that side by side. Okay. So, what do I like about this? Here is the original position. Yeah, we have that gain of 205%, and we can adjust this position so that we still have further upside on the stock or on the long call position. Let me show you what I mean here. This is your current long call. Got a good gain here. $325 profit, 300 a little bit more at expiration. You're looking good. It's a good position to be in. You can take the profits now. But if you're still bullish and you think that Walter Energy could continue to move up, this blue profit and loss chart is showing you what the long call would look like if you rolled up to a higher strike price. So for the next 30 days, you're guaranteed to make $80. Yes, it's not the $325 you have right now, but it still has the opportunity there that you have a long call at no cost. You're guaranteed a profit of $80, and if the stock continued to move up to, let's say, 42.5, you could realize more profit. So you don't guarantee the full profit, but you lock in a profit you're going to make no matter what happens, and if the stock continues to move up over the next 30 days, you can realize further upside gains by rolling the call. So for those of you doing long calls and long puts, yes, there will be rollout opportunities. We showed some of the vertical spreads. We showed the covered calls. The naked puts would be a little bit similar as well. We did a collar there, of course. Many of you who are following radioactive trading, you know that you can see the same rollout opportunities. If you're tracking the, oh, that's not the one I wanted. Sorry, folks. Got too many tiles open here. It's this one I don't want. There we go. I want to go back here. Where is my Mary put? Here's a Mary put on D.R. Horton. Bought stock at $16.65. January 19 put at $3.70. Stock's currently trading at $21.71. So we've got a really good gain in the stock there. As again, position actions, position analysis, tracking a Mary put position. All right. There's our risk. Currently have a 6.6% risk on the position. And as you scroll down, you see your rollout opportunities. So following the rules in the blueprint, some opportunities for income method number 1. Income method number 3, shortening the time. Some bulletproof opportunities with income method number 4 is probably where I'd focus my attention on. See here how the risk is negative again. And this income method number 4 is similar to what we just showed with the long call. I'd sell to close my existing put and I can buy a higher strike put as I'm still bullish on the stock, maybe even further out in time to February, and have a locked-in profit and still unlimited upside. So I'd add a debit to it, but we'd still have time on the trade. So for example, if I sold to close my existing put and bought to open the January 23 put, side-by-side comparison, what would that look like? There we go. There's our bulletproof position, guaranteed to make $91 or 4.1% no matter what happens next. Still have unlimited upside and the availability to do other income methods, maybe sell a call or do one of the other adjustments. All right. So all the processes are the same. Once you start tracking your positions, then you're going to be able to go ahead and use that position analysis link. And as you close positions or roll positions, let me go very quickly, one last view. I'm going to go to the Married Puts 2012. So as you make adjustments on the positions, just the portfolio here, if I go into the analysis view, remember, this is showing me all the closed positions, all the adjusted positions, all the closed and adjusted positions, organized by stock. Okay, so all the positions we've traded on PXP, positions, the closed positions on DHI and AUI, those are all shown for us as well. Okay, so that's in the analysis view, and of course the historical report's really good for tax time, so it shows me all of my closed gain or losses, realized gain or losses, what I still have open as well. All right. Well, ladies and gentlemen, sorry I went longer than I thought I was going to. The portfolio does take some time to go through the explanations. There's a lot to show there. I wanted to make sure that we covered as much as possible. There are other things we can get into more deeply, and if you have questions about those, please send me an email. Call me during the office hours, of course, or just schedule one of the coaching sessions. All right. So the 20-minute delayed service gives you access to all the tools. You know, we didn't even look at the search tools today. The 20-minute delayed service for PowerOptions, $60 per month. Our real-time service, every time you submit the page or refresh the information, you get the numbers and the calculations at that instant. That's $80 per month. And then the real-time quotes with the historical access to the historical tools for back testing and so forth, that's $100 per month. Our remaining schedule for the rest of the week, folks, every Tuesday and Thursday at 12 noon Eastern Time, so I should say Thursday at 12 noon Eastern Time, Kurt Frankenberg is going to host the Introduction to Radioactive Trading presentation. Friday at 4:30 p.m. I typically host that open discussion Q&A session. That's another opportunity. If you have other questions about the portfolio, you want to join us 4:30 p.m. just after the market closes, 4:30 p.m. of course Eastern Time. Let's go ahead and you can sign up for the open discussion. I don't have any planned material for that presentation. It's designed so you can show up and just ask your questions, and we'll use the PowerOptions tools to answer those questions. A great thing to do, especially at expiration time. That's why we decided to run the portfolio one today, so you can see how it can help you with tracking and calculating and managing your rollout opportunities and potential adjustments there. We're doing the heavy lifting for you in the portfolio, so you want to take advantage of that. All right. Again, questions. Contact me anytime. Send us an email to support@powerop.com. You can reach us toll-free during market hours at 877-992-7971. If you live outside the continental U.S., you can, of course, reach us at 302-992-7971. There's contact links at the bottom of every PowerOptions page. Well, ladies and gentlemen, thank you for joining me this afternoon. I hope you enjoyed the presentation. I hope you got a lot of useful information. Bob, thanks for the comment. I do appreciate that. I'm glad you enjoyed the webinar. Take care, everyone. Happy trading. Happy expiration. We'll see you later on this week for one of our other webinars, or perhaps during one of those coaching sessions we'll be able to talk one-on-one. Good night, everyone.